zombie companies will be going bust. Banks will be in trouble. So what happens? Well, you rescue these things. How do you rescue them? Well, you replace private sector credit with government credit, which basically means that the whole of this government borrowing thing is just spirals out of control. I think we are on the cusp of that. And once it starts rocking, I don't think it'll take terribly long for the whole system to come down.
This is Elijah K. Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for August 26th through September 2nd, 2024, while supplies last. First, we have the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. Next, we have compelling pricing on various pre-33 American gold coins. For current pricing on these or any of our other products, call 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty in Finance. We're always delighted to have this distinguished returning guest, Alasdair Macleod, a former bank director and the head of research at goldmoney.com and the founder of his Macleod Finance Substack, joins us this Thursday, August 29th, 2024. Alasdair, thank you for joining us again here on Liberty in Finance.
As always, my pleasure.
We have some very weighty topics to cover with you today, serious ones that we all need to pay attention to very closely as events move forward here. Or forward is, I guess, debatable, and some of this is sort of regressive. But at any rate, you've written just recently about the debt trap that the fiat West, all over the world, fiat currencies and their masters find themselves in, and how that is likely to be the beginning of the undoing of everything financial in our lives. We need to talk about that. Gold performance has been noteworthy recently, holding up in the face of lots of turmoil and lots of smackdowns in the silver price that gold has been holding fairly steady in the face of. We also want to talk to you about the economic implications of what some consider to be egregious or lunacy, depending on which way you look at it. That's unrealized capital gains taxes. Basically, the government taking their slice of their cut of whatever you have, whether just because they've made it apparently more valuable by destroying the currency in which they're measuring it, so they get their cut of flesh, even though you haven't bought or sold anything. And then your concerns about talking to a Russian expert who says, unless something dramatically changes course, we're heading towards basically the saber rattling is starting to be meaningful about World War III possibilities, and we've got to turn the corner. So let's get into this. First of all, your most recent writing about the debt trap that the West finds itself in, and why this is accelerating, why this is absolutely something that people must not ignore if we do, it's at our own peril, and why it's likely to be the stone that pulls down the whole dam and starts the unwind of everything. Let us know what you're thinking about that.
Yeah, sure. The level of US government debt is roughly 130% of GDP. Now, to put that in context, it has been climbing to that level in peacetime. If you look at World War II, the most it ever got up to was 119%. In other words, the debt today is greater than it was with the war economy in 1946. Now, that is extremely important. The reason it's a debt trap occurs when the growth in your income, and it doesn't matter whether it's a government or individuals or a company, when the growth of income is less than the growth of debt. And obviously, the growth of debt includes the interest which is being rolled up. Now, that is now the situation again. We had this during the great financial crisis, when Lehman went bust. We had it in COVID, obviously. And we were just sort of getting our heads above water, or at least America was getting its head above water in terms of the debt trap, before we then started going down into that situation where income was not exceeding, if you like, the growth in debt. The growth in income was not exceeding the growth in debt. So, and the reason for that basically is you've got a slowdown in the US economy. You've also got inflation. And one way and another, the foreigners aren't really buying your debt. I mean, we've got China is not buying for her reasons, and nor is Japan. So the foreign involvement in acquiring debt, while since, I suppose, the Lehman crisis, their holdings in US treasuries have doubled. In fact, the percentage of publicly held debt in foreign ownership has actually fallen from just under 50% to just under 30%. So they're just not participating in the growth of your debt. Now, we're now talking about a situation where foreigners are going to get less, if you like, in return for lending money to the US government because interest rates will be lowered. And this was clearly signaled at Jackson Hole by Jay Powell. And I think that is a huge, huge mistake. And already we can see the effect on the dollar. The dollar has entered on a chart, something called the death cross, where the price is below the 55-day moving average, and the 55-day moving average is crossed below the 250-day moving average. All these, the price and average is all declining. That is a death cross. It's a very, very bearish signal. And you can understand why. And so, I mean, the other side of it, of course, is gold. And this is why gold is going so well. I mean, under the gold price, you have a golden cross, which is the reverse of the death cross. So, you sell dollars, buy gold. I mean, it's actually as simple as that. But returning to the debt problem, this means that the debt is going to grow to the point where it just basically becomes impossible to fund. And the only way in which it can be funded is for interest rates to rise substantially, and at the same time for the government to cut its spending and to ensure that its budget is in balance. Now, here we are ahead of a presidential election in the presidential election year, and there's absolutely no hope of that. That is for sure. There's probably very little hope of it if what the two main contenders say about their policies come about. There's absolutely no hope of this happening in the next year or two. On top of that, you've got the problem that, for example, the SARM rule, which is based on the level of unemployment, when that rises to the point where it's exceeding the 3-year moving average, however it's constructed, has been a very reliable indicator of a recession. And this is part of the reason why Jay Powell is now looking to manage the economy rather than managing inflation, because the threat is that the economy will go into recession. The problem here is that when you get an economy running into recession, Keynesian economics says that government's got to step in and increase the deficit in order to support the economy. Yeah, but they're already at 130% to GDP, and the foreigners are already backing off buying more debt. So this is a real crisis. And it's just amazing that so few people seem to, and particularly the politicians, seem to have absolutely no idea that this is a problem. And markets continue blithely along in their own course without even thinking about this. I mean, the dollar has been the world's reserve currency for so long. The assumption in America is everybody needs the dollar. They will keep on buying the dollar. They must keep on buying the dollar because they need it for trade. They need it to go and buy commodities, whatever. But actually, if you look at what's happening, the world is moving away from the dollar. And the people in America are the last to understand this. And I have to say that whenever you get a currency crisis, it is always the foreigners first who actually understand what's going on, because they don't need to hold a foreign currency. They will be the first to sell it. And then at some later stage, the domestic users of the currency begin to realize that it's the currency going down, not prices rising. And that brings me on to another element of this, and that is inflation. The idea of inflation, as put about by the establishment and by the press, is rising prices which can be controlled. I mean, the latest one is, Ms. Harris saying that, price gouging and all the rest of it, and we will stop it. So we'll do what Diocletian did. Not that she's ever heard of Diocletian, I'm sure. And that is, put price controls on.
Well, it was also that same playbook was brought up by Richard Nixon, 90-day price freeze, that sort of thing. Absolutely ineffective.
Absolutely. Dead right. Yeah. When they decided to suspend the Bretton Woods Agreement. Yeah, absolutely. It doesn't work. It never works. But the point about this is that the driver of inflation is actually budget deficit and consumer borrowing to fund consumption. Those are the things that drive up prices, or, if you like, put the other way around and more accurately, drive down the purchasing power of the currency. And that is exactly the situation we still have, and it's going to get worse, particularly from the government end. And when you look at consumer behavior, savings in America have collapsed. They've gone negative. So, this is a disaster for the economy, where you have got a combination of a debt problem. You have got, a nasty recession, potentially a nasty recession, and I would actually call it a slump in the early stages of development. And on top of that, rising prices or a loss of purchasing power in the currency. This is the worst possible stagflationary scenario. Now, we had this back in 1976. And in 1975, actually, sterling collapsed against the dollar. It went down to around about, I think, $1.10, roughly where it got to in recent history, maybe even a bit lower than that. And America came in and loaned us money in order to save the currency, which was fine. But obviously the condition was that the IMF come in, the IMF repays America, the IMF puts in controls, requirements, and all the rest of it, which takes it away from the politicians. And this is exactly what happened. The IMF said, right, you've got to balance your budget. Don't care. You raise your taxes, however you do it, but you've got to have a balanced budget. And in order to fund the situation, interest rates rose to the point where we had 3 bond issues of 15, 15.25%, and 15.5%. Now, the problem that America faces is that there isn't someone like the IMF to come along and rescue them. I mean, it's just not there. Because apart from anything else, you own the IMF. I mean, figuratively speaking, the IMF might account in SDRs, but basically it's a dollar-based organization. And it's not in a position to rescue the dollar. So you've got you have a situation which is worse than we had potentially in 1976, when we were funding at 15.5% coupons. Just imagine what that does to the US economy. Is it avoidable? I think not. Why? Because of the debt trap. And I think, we've talked on this channel so frequently about the dangers in the banking system, zombie companies, and all these things, geopolitics, et cetera, et cetera. But I think the one thing which, above anything else, will end the fiat currency system is actually the collapse of the dollar because of the debt trap, which it is now entering into in just big time, absolutely big time.
Along the way here, you described pronouncements by politicians who seem to not understand the gravity and the magnitude of what's going on, the fundamentals of the landscape that we're dealing with. It's been difficult to suspend disbelief as long as we have, for those of us who've been paying attention, our channel, which was originally Reluctant Preppers, talking about preparedness and awareness since 2013, have been chalking up example after example after example of just shocking revelations that seem to be ignored or denied by officialdom. It's getting to be nearly impossible to maintain the attitude that, well, they just don't understand. They just don't understand. They just don't understand. It seems more and more likely that they absolutely are running a playbook, whether it's the functionaries, the front faces that we're presented with, are the ones who are just being the lackeys that are carrying out the orders, but somebody is doing a magnificent job of walking us down a path of total destruction of our financial lives. And it's becoming increasingly difficult to imagine that this is all through just ignorance and incompetence. One example of that that I'll give you two faces on is you mentioned Kamala Harris or Trump, either one, calling for weaker dollar as a solution to our ills, and yet at the same time saying that they have the back of the ordinary person and they are sympathetic to rising prices and the increased cost of living and buying groceries and buying gas, and they're going to do everything they can to prevent those things from going up. And yet you've pointed out for years to our viewers that there is no difference. It is two sides of the same coin. Rising prices means that what you're seeing is the effects of the destruction of the currency. So if you further have to say, by policy, we need to destroy the currency further to solve structural problems in our financial system. But, oh, by the way, we care a lot about the ordinary person and we want to make sure that they don't get hurt by rising prices. It seems absolutely either shockingly ignorant or duplicitous. Any comments from you on that particular phenomenon of weaker dollar, but capping prices?
Well, it's a bit of both. I mean, it's it's part ignorance, and also we must recognise that politicians have a completely different agenda from an economic agenda, and usually, I mean, a good politician will be able to lie to the electorate and get elected, and pull the trick off that once he's elected, he or she is elected, then they can manage the economy sensibly and within sensible parameters. So it'll be interesting to see whether either Trump or Harris actually do take a more responsible economic course. I mean, in the case of Harris, I mean, she would have to have advisors around her to do this, because she's a lawyer and doesn't understand economics. I mean, that's absolutely clear. But we'll have to see, if you like, the proof in the pudding will be in the eating. That's sort of a phrase in English. I don't know whether you've got the equivalent in American. So I think there's an element of that in it. But there's a huge amount of ignorance. I mean, the whole idea of governments trying to manage economic outcomes, this is something that only really started with President Hoover and then was doubled down on by FDR. Until then, the perceived wisdom was, you don't mess with the economy. Okay, if there's a recession, then basically what that means is that all the dicey stuff has just got to get cleaned out. Don't stand there and do it, but just let everybody get on with it. It's Schumpeter's creative destruction, if you like. The creative destruction is something that should be happening all the time, but because you've got a cycle of growth and recession in bank credit, of course, Schumpeter's idea basically comes in spades every now and then just goes away. It's all about credit at the end of the day, and the availability of credit, interest rates, and so on and so forth, and the abuse of credit. And banks undoubtedly get carried away when the economy looks a bit better, and they sort of think, well, this is good, and then they start angling for market share by lowering interest rates, their lending rates below, if you like, a sensible commercial level for strategic purposes. I mean, we've known this. I mean, you can see this cycle going all the way back, but the mistake that the Keynesians made was to think that they could manage it. You can't manage it. You can't manage human nature. I mean, it's and that's really where the whole thing has gone horribly wrong. And I think, in a sense, what we now face is the end game, if you like, the end of that whole period of distortion, because distortions are being covered up, chuck credit at it, government credit if the banks won't do it. And the result is, I mean, they've had to distort the statistics. I mean, statistics about prices. I mean, as John Williams shows, the whole thing is an absolute myth, the idea that inflation is at 2-3% or whatever. And it's been a myth for so long. And anyone, in America or indeed in this country, who sort of looks at prices over a long period of time, I mean, they know they've been robbed, basically. The statistics don't reflect the degree to which they have been robbed. And I have to say that what we are seeing in this country is the situation is getting worse. It's getting worse because we've got a new government which it's pledged to look after the people who work, the working person. Yeah. Well, we're all working persons. But what they actually mean is they mean that they are going to hit the wealthy with malice aforethought. They want to rob the wealthy in order to keep the whole system going. They're talking about equalizing capital gains tax with income tax, which means that capital gains tax will go up to 40%. This is going to, they won't collect anything because people will just not realize their capital gains. And I guess that Kamala Harris is sort of thinking, well, the way to deal with that is tax the gains before you even make them. I mean, this is become so economically corrupt that the whole system is on the edge of collapsing. And I go back to the debt problem. To me, I think the thing that will collapse it is the debt problem. And it's not the private sector debt problem, it's the government debt problem. And it'll be made a lot worse as the economy tanks, because not only will interest rates have to rise, but it means that zombie companies will be going bust. Banks will be in trouble. So what happens? Well, you rescue these things. How do you rescue them? Well, you replace private sector credit with government credit, which basically means that the whole of this government borrowing thing is just spirals out of control. I think we are on the cusp of that. And once it starts rocking, I don't think it'll take terribly long for the whole system to come down. And I mean, quite frankly, I don't think anyone has any interest now in allowing this system to perpetuate. It's got to the point where it's actually robbing us completely of everything we have to support a government we can't afford. We have that problem here. You have that problem in America. And it's as plain as a pikestaff.
In passing there, you described the phenomenon of taxing unrealized capital gains. If people understood what you've been trying to teach us for years, that the rising valuation of things, whether it's consumer prices or the valuation of things you haven't even sold, like your home or your whatever, are in fact entirely outside your control, in the sense that it's the destruction of the currency, which is being done by design, by policy, systematically in a very predetermined manner by the central banks in collusion with the treasuries, etc. They are destroying the currency by policy, and therefore that causes necessarily this thing you have no control over, which is the nominal gain of nominal value of everything else. And therefore for the government to come at you and say, well, now we need a cut of that gain, which they were absolutely in control of, and which is fictitious, because there's been no change in the asset. It's just the same asset that is now it's being measured in a shrinking yardstick that you have no control over as an individual. It's entirely it is theft in my view, but it's also disempowering to productivity. And the idea of capitalism that's supposed to be energizing and flourishing and all that is because you have the idea that if I work hard and apply myself and meet a need and do something creative, I'll be rewarded for it, rather than in the Soviet Russia, everyone's depressed and just standing around in cabbage lines or whatever, bread lines, because it didn't make any difference. If you put out an effort, you're going to get paid the same as everybody else, and you're not going to get what you need. So this new dystopic future that we're entering here, where doesn't matter. It's outside your control entirely. The government will just decide when it wants to come and take away your stuff until, perhaps, as Klaus Schwab and the WEF had said, you will own nothing. This seems to be the future that has been planned for us. If people want to not participate in that, some are moving into solid assets like gold. You've mentioned that gold is showing some resilience over this. How is gold performing, and what do you think is underpinning that performance?
Well, it's precisely, as I've always maintained, it's not a question of gold going up, it's a question of paper currencies going down. And that continues to be the background to it. But there are other factors. You've got a very, very strong savings, what's the word I'm looking for? Savings ethos, if you like, in China, where households put aside on average something like 35% of their income. I mean, that's huge, $6 trillion. And you've got to think where that's going to go. It can't go into foreign currencies if they wanted to. Property markets shut off, and it's going into bank accounts. The same banks who, by regulation, are required to offer gold accounts to their customers. I mean, there's a minimum amount you put in, but the minimum amount is less than $100. So I would expect to see more and more of those gold accounts, just accumulating, and the banks which run them, these are not allocated accounts by any stretch of the imagination. They're unallocated accounts, but it does mean that the banks that offer them have got to have some decent gold cover, so they're in the market getting what they can. So that's keeping things short. Central banks understand what we're talking about. They won't admit it, but they do understand what we're talking about. And they want to get out of dollars and get into gold because they know that gold is money and dollars are credit. And what's happening to credit? The value of that credit is bound up in the faith, if you like, of and trust in the US government. What's happening to that trust? I mean, that answers the question, the relationship between credit and money. On top of that, I think that the situation, if you like, of investing institutions in financial markets is very, very interesting. When I first became a stockbroker, it was normal to have an exposure of roughly 10% to 15% of your assets in gold or gold proxies, I mean mining shares or something like that. This was the protection, if you like. And indeed, if you go back to the 30s, they would say that a gentleman's portfolio was comprised of gilts and gold. No equities in there at all. Now, we've moved away from that. And I think that the average exposure, if you take the entire investment management industry, exposure to gold is probably not much more than 1%. So in other words, they haven't bought it. As things develop, and you've got this huge, great valuation disparity between the S&P and bond yields, that I think in a recession is going to close, and it's not going to close by bond yields falling. It's going to close by equity prices falling, and we've seen sort of a few shaky things happening recently. I mean, the S&P is basically sort of 5 or 6 or 7 tech stocks led by NVIDIA. NVIDIA had a bit of a rocky time last night declaring their results, and the stock got hit pretty badly. I haven't seen how it's trading today. But you can see that there's sort of cracks, if you like, in this sort of high-tech you sort of huge, great corporations at the top of the S&P, their valuations are stalling. Let's put it that way. Now, when that goes into reverse, what does the fund manager do? Well, he's going to sort of start thinking. I mean, he might sort of think it's a good idea to buy gold, but he's got a problem because physical gold, is not a regulated investment, and he will have his compliance officer down on his back if he goes out and buys gold. Why are you doing this? Do you realize that this is not a regulated investment, et cetera, et cetera? You can see that they tend to steer clear of it. Now, they can get around this by ETFs. And so far, basically ETFs, the flow in ETFs in the West has been basically sell, sell, sell. And, the signs it's stabilizing, but they're not really buying ETFs on balance. And then there are mines. And mines are, fascinating because there's been no research really conducted by the big houses. They've all cut back on their mine research. So that's going to be a dramatic market. But, we have this thing with gold exposure, not much more than 1%, if that. I mean, that's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted is going into a death cross, while at the same time, gold is, it's found support at its 55-day moving average, and it's knocking on new high ground. I mean, it's fascinating how the buyers are in there at $2,500, and they try and cap it at 2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly. So, we are on the cusp of something I think very, very interesting as far as gold as a whole is concerned. Now, as far as silver is concerned, that is also very interesting, but for rather different reasons. There was, various people picked up on a story that Samsung have got a new solid-state battery which uses silver and not that very, very dangerous lithium. It's got the range, it's not so heavy. I mean, it's got everything to recommend it. Rapid charging, yeah. I mean, it's just incredible. You can get something like 600 miles and 10 minutes charge. I mean, whatever the figures are. I mean, that makes the whole of the EV thing sensible. But there isn't the infrastructure to cover those huge charging currents. That's going to take time to put in. But nonetheless, China will copy Samsung. They will have the same technology very, very rapidly. They will put in the infrastructure. And we'll be finding that these Chinese cars, even with a 100% tariff, are fiercely competitive compared with anything coming out of anywhere else. This is the reality of the situation. It's going to mean that silver, which has been in supply deficit for the last 4 years, according to the Silver Institute, silver has got the potential, really, I think, to easily double from here. Whether it does or not, we'll see. But you can see that with a rising gold price, silver is likely to rise very rapidly as well. And I think the gold-silver ratio will fall from current, 83, 84, whatever it is, easily down to below 60 on what is developing, a mixture of the monetary situation with the collapse in credit and, physical demand for silver, mainly from Asia, which is where all the action is.
Now, you've also written extensively over and spoken with us and with our audience over a period of time about escalating geopolitical tensions and how we have multiple hotspots in the world that could potentially come to a head, some of which seem to be graver than others and getting your attention right now. Where are you seeing the greatest concern, and how do you see that potentially forming a real risk to our financial and physical lives?
Yeah, it's actually I think we're at a very, very dangerous point, and I don't think people generally realize. I mean, the problem we have analyzing what's going on with Russia, the Ukraine situation, China, and so on, is that, our blessed governments the propaganda they put out is so misleading. It really is. And no media outlet dare contradict it. It goes along with it. It amplifies it and makes the situation even more confusing and more dangerous, may I say. The current situation, there's a guy called Gilbert Doctorow who I met actually, believe it or not, at a barbecue outside Brussels where I was speaking. And he was one of the guests there. Charming man, Russian, educated in America, And he regularly appears on Judge Neapolitano's show about the situation in Russia. And not just what he says, but also what I've read. You saw some time ago, it wasn't all that long ago really, that there was a drone attack on radar stations in southern Russia from the Ukraine, which wiped them out. At the same time, there are two carrier fleets, American carrier fleets in the Eastern Mediterranean. Now, everybody assumes that that, if you like, is some sort of defensive thing against Iran. It's a sort of show against Iran, don't escalate this because we're here and if you want to involve us, then you know the story. But the fact of the matter is that from the Eastern Mediterranean, they're also in range of Russia. And Russia is now, according to statements by Lavrov, who speaks for Putin, and also his deputy foreign minister, it is quite clear that Russia is actually very alarmed by this and is seriously considering a nuclear response. Now, the problem with it is that a nuclear response in Europe would actually wipe out Europe. What Russia is doing is it is making it clear to the Americans that it will attack America, which it can do, obviously. I mean, it's just across the water from Alaska. It will not confine a nuclear escalation to Europe. So it knows from the way America has behaved towards Europe. I mean, for example, the floods of refugees. Who cares? I mean, they've destabilized Europe with a refugee problem. But does America care? No, they don't. The only thing that the Americans really care about, as far as the Russians are concerned and as far as us Europeans are concerned, is an attack on their territory. And that's the basis of the threat from Russia. Now, this is a situation which seems to be escalating the whole time, with the invasion into Kursk, for example, which involves, if not NATO forces, mercenaries, if I can put them that way, undercover troops, as it were. Certainly American and British equipment. I understand that the French and Poles are in there as troops, as well as some Americans. The attempt is to try and expand that too into other oblasts, if you like, apart from just Kursk. So you can see that this is a situation which is extremely delicate as far as Russia is concerned. And the idea that we are gaining on Russia is therefore immensely dangerous. Now, I notice, and I think there is a little bit of hope here, I noticed that Jake Sullivan, who is Biden's top security man, is on a 3-day visit to Beijing and has been having very high-level talks. I mean, even with President Xi, who very often doesn't see senior dignitaries from other countries. Now, we know that, the press release say, it's all about, the South China Sea and, automobile exports to America, and all this sort of guff. I would be very surprised if Jake Sullivan is not trying to find out the Chinese attitude to the threat against America from Russia. And I think that President Xi would make it absolutely clear that when push comes to shove, she would side with Russia. Now, that is terribly important because, Jake Sullivan's got to go back and give the message to the American administration that this is not going to work. The idea that we can, if you like, disassemble Russia with China just sitting on the sidelines, forget it. They will come in on Russia's side. And the reason they will come in on Russia's side is because they have this plan between them. And their plan basically is to get America out of Asia. I just cannot see how China would go back on that plan. It doesn't make any sense at all. And it doesn't make any sense, particularly in the knowledge that in recent days, I think in the last month, Putin has traveled around China, North Korea, even Vietnam and Iran, and got them all into signing a joint, if you like, defense agreement between them. Now, I don't think this is quite on the NATO lines, attack one of the NATO members and we'll all have to attack you sort of thing. But you can see which way this was going. And I think that it was a very important signal to the US intelligence community that, attack Russia and you're going to take on not just Russia, but an awful lot else. I also think that returning to the Middle East, or what they're now calling West Asia, that another aspect of this, I think, is that Russia is probably telling on back channels, the Jake Sullivans of this world, look, if you're thinking of attacking us, then we will let Iran wipe out Israel. They have got something which is called a Murmansk B, I think it is, which is the most extraordinary machine. It pushes out an extremely high voltage electronic signal which interferes with all radio communications. Now, believe it or not, within something like 5,000 to 8,000 kilometers. We're talking about up to 5,000 miles. Now, if they use that against Israel, it would wipe out the dome, the Iron Dome. It would also interfere with communications for the two American carrier fleets in the Eastern Mediterranean. So that, I think, is another aspect. And nobody's talking about that. This is speculation on my part. But I just think, if I was in Putin's shoes, that is what I would do. The problem that the Americans now have is how do they back down from this situation? That's going to be interesting. And I just hope they do back down, because the alternative is, we'll be saying goodbye.
We never like to say goodbye when we're having talks with you, Alasdair, because you give us such a deep and balanced perspective internationally, and from your deep career and connections in the banking industry and analyst of the precious metals markets, etc. If people want to follow you on Substack, which is your most prolific place that you're publishing these days, how can they get connected?
Yeah, it's. I think if you just Google Macleod Finance Substack, you'll find it. It's actually in my name, alastairmacleod.substack.com. But I'm the first to recognise that the spelling of my name is quite Scottish, and therefore, you may misspell it. You may find it even if you misspell it. But just Google Macleod Finance, and I'm sure you'll come across it.
And if, folks, you don't want to miss a single episode with Alasdair here on Liberty and Finance, make sure that you're on our mailing list. It's entirely free. If you go to libertyandfinance.com, put in your email address, click submit, make sure you confirm on the confirming email. You'll get one email in your inbox per day with our latest interviews and any weekly specials. And Alasdair, we are always grateful for your presence with our viewers and subscribers, and look forward to our next visit here. And thank you for joining us again, this time on Liberty and Finance.
Thank you very much for having me on, DK.
This is Elijah K. Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 26th through September 2nd, 2024, while supplies last. First, we have the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. Next, we have compelling pricing on various pre-33 American gold coins. For current pricing on these or any of our other products, call 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.